Sir, sir, you are live now. We welcome you to the session, sir.
Not a problem. Thank you very much.
Thank you, sir.
Hello. No. You told you will welcome all this. No. I am. Okay. Otherwise, okay. I will start. Not a problem. What you will do? Okay. Good afternoon to everybody. Before starting, thank you very much to our president of the institute, Vibhuti Nayak sir, and vice president of our institute, TCS Srinivas Prasad, and chairman of India Taxation Committee, Ashish Tate sir, and TRD department, Tax Research Department, and all the members, those who have attended, ladies and gentlemen. Today we will discuss GST impact on cross-border transaction. Before that, what exactly cross-border transaction? What is the border? See, in India, we are having a physical boundary as well as coastal boundaries. Lot of neighbor countries are there, and even now coastal also there. That is our Indian boundary. Whenever if you send a goods out of the country from India to abroad, either it is a goods or services, or if you import a goods or service from abroad, what is the tax impact? That we will discuss today. We know very well 1/7/2017, our government has implemented the GST. One nation, one tax, with a small, because of federal state, they have come with a little bit different structure, IGST, CGST, SGST structure. But in case of cross-border transaction, no doubt at all, whether it is an import or export, we are supposed to discharge IGST. Normally, what will happen? Whenever there is an outward supply, we are supposed to discharge, or we are supposed to collect the tax liability. Then whenever there is a receipt of goods, if you buy a goods or services from a registered if you purchase a goods or services from a registered dealer, then whatever they have levied, that we will take it as an input in normal transaction within the country. There also, whenever you are buying within the state, they are supposed to levy CGST and SGST. Whenever you are purchasing from other state, automatically they are supposed to levy IGST liability. That as our member, they know very well. Whenever you purchase a goods or services from registered dealer, absolutely no problem. If you buy from unregistered dealer, automatically you are supposed to discharge the URD tax under section 9(4), but time being that provision is not there. Whenever they will implement, once again, we are supposed to discharge the tax on URD. But there is a listed services and goods. If you buy, automatically you are supposed to discharge the RCM, and depending upon your eligibility, you are eligible to take the input tax credit. That is one part. That is relating to transaction relating to within India. Then if you go to the cross-border transaction, there is two types. One is import, another one is export. Both are taxable in the hands of the assessee, subject to nil rated or zero rated tax. That we will discuss later. Export part we will discuss later. See why I am telling. In case of cross-border transaction, even export also taxable, even import also taxable in the hands of the assessee. Import you are supposed to discharge under RCM in case of service. In case of import, along with custom duty, you are supposed to discharge the IGST liability. Then whatever you have paid IGST liability, you are eligible to take the input tax credit depending upon the goods and services. That altogether different issue. Now today we will discuss the import, then we will discuss export. Export is taxable, but in India, export is zero rated. Then there is no question of tax liability. There also we are having a two option. One option is if you take a LUT, again at that zero rated transaction, you can do it. Whatever input you have taken, that you can take it as a refund, one part. By utilizing input tax credit and cash ledger, you are supposed to discharge the tax liability, and whatever you have discharged, that you claim as a refund. Two options are available. At the time of discussion of that export, we will discuss all this issue. Now in between, any members, if you want to ask any query in chat box, I will reply it. If you are having any query in each and every 10 minutes or 5 minutes, I will come back to chat box. Okay. I will come back to chat box and I will clarify all the query. Okay. As of now, there is no query as such in question and answer. But in future, depending upon our members' query, I will clarify each and every query. I will clarify. Dear members, in question and answer, please put your question so that I will reply it. Now, once again, I will go back to PPT. What is import? If you bring any goods to India from abroad, that is called as an import. For that matter, even services, if you receive any services from abroad, those who are residing in India, that is also import. Import of service, import of goods. Introduction of import under GST. Goods and service entering into India from a foreign country, that is import. Whether it is a goods or service, at par, no doubt at all. Taxability, it's all depending upon the service or goods or HSN, it's all depends. That is a altogether different issue. But What is import? Goods and services entering into India from foreign countries. Import. Legal framework for import transaction. There is a set of rules and regulation. Within that only you are supposed to import the goods. There is a restricted goods. Okay. For that special permission is required. All these things we will not discuss today. We will discuss today only GST on import. Okay. Legal framework. Important of import under GST. Revenue generation. Control of international trade. See the why importing. Okay. That whatever imports, if you sell in India, you are able to generate the revenue and control of international trade. That is also very, very important. See, by putting import duty, lesser import duty, higher import duty, all the governments, what they will do, they will control the international trade. Say, for example, if the product locally available and government want to control the rate, then automatically what they will do, they will manage the import. Whenever the product or product rate is higher in a country, if they want to control, they will allow the import. Say, for example, in a local market, the revenue or rate is lower, then they will stop the import or they will put higher rate of import duty on imports so that they are able to manage the rate of the product. That is what they will manage the international trade. It is very, very important. Otherwise, what will they will do? Those who are manufacturing hub like China, they will dump the product in India. Automatically, Indian market or Indian manufacturer will face lot of problem. That is why managing the international trade is very, very important. Okay, the Indian government will manage all this international trade through the import duty. Depending upon the situation, maybe they will put higher import duty or they will levy lesser import duty or otherwise they will waive the import duty. All these things are common. That is why whenever you import the goods, sometime government will restrict some of the goods as a restricted goods so that you have to take a special permission from the government. Then only you are eligible to import. Otherwise, you are not at all eligible. That is called restricted goods. I think, dear members, PPT and voice, everything is okay. I think okay. See, only one member, he has put a message saying that whether webinar is cancelled or something like that. But webinar is going on. If members are comfortable, I will continue. Please put a message, 1 or 2 people, you can put a message. Otherwise, I will continue. The now next point is key provision of import under GST. As already we have discussed, each and every
No,
import.
Sir,
sir, madam?
Sir, PPT is visible, sir.
Visible, no? Thank you very much. I will continue with PPT.
PPT
okay.
is visible, sir.
Okay, thank you very much. Okay, integrated goods, IGST. Whenever you import the goods, you are supposed to levy the IGST. How to calculate the IGST and what is the base price? Everything we will discuss now. IGST is levied on imports, no doubt. Custom duty and other duties applicable. Whenever you import the goods, you have to calculate the basic price. On basic price, you have to add the freight charges and insurance. Over and above, you are supposed to levy the custom duty, custom cess, and over and above, you are supposed to levy the IGST duty. Normally, the basic rate plus custom duty plus all other cess. Along with that, if you add, say for example, 100 rupees is the basic price, custom duty is 10%, 110%. On that, IGST 18% or whatever, depending upon the product rate. That is very, very important. This IGST is leviable depending upon the product. Once again, whatever we will recall, HSN classification, harmonized system nomenclature. The product tax rate is depending upon the HSN. We know very well. Each and every product depending upon the HSN, based on your import manifesto, the custom authority will levy the tax, IGST. Normally, the process is like this. Those who are importing the goods, they have to declare an import manifesto. After declaring the import manifesto, they will file a bill of entry for home consumption. Whenever they file the bill of entry for home consumption, they are supposed to discharge the custom duty along with the IGST. This is the process of import. Sometime what will happen, if you are running a bonded warehouse or if you are clearing a goods to SEZ or EOU, without payment of duty, you can clear the goods to the SEZ or EOU or bonded warehouse. But whenever you are selling from a bonded warehouse, you are supposed to charge import duty as well as IGST. Like that, if you are selling to SEZ or EOU, at the time of selling, no doubt at all, it is exempt. No need to pay even import duty and IGST. But whenever these SEZ people or EOU people, if they are selling their product to locally, then automatically it is taxable. They are supposed to pay basic custom duty and IGST also. But if they export out of India, then there is no tax liability. Okay. IGST we have discussed, custom duty we have discussed, applicability of IGST on import or goods and services. See, there is a slight difference between goods and services. Whenever you import the goods physically, then each and every border, say for example, airport or ICD, customs authority, in coastal, some of the custom department, physically you are importing the goods. While releasing the goods, you are supposed to file the bill of entry. At that time, you will discharge the IGST liability. But in case of service, what will happen? Whenever you are importing the service, identification is not so easy, but consideration you will pay whenever you are raising the invoice, and consideration you receive, whichever is earlier, you are supposed to discharge the tax liability in the case of import of service. Chargeability and rate, say for example, rate of tax, it's all depending upon HSN and SAC code. Say for example, if the product rate is 5%, you are supposed to charge IGST 5%. If the product rate is 12%, you are supposed to charge 12%. And if the product is 18% or 28%, depending upon the product rate, you are supposed to discharge the IGST liability. In case of service, majority of services are taxable at 18%. Absolutely no problem. Depending upon the SAC code and tax rate, relating to services, you are supposed to discharge the tax liability. Then is there any question as of now? See, another 5 minutes we will discuss the questions. Please also touch upon import of software. Absolutely no problem. Import of software we will touch upon. Okay. Purchase of goods from unregistered person. Can you show the purchase in GST portal and pay RCM under? Ha, sir, Amuda, somebody has talked about a unregistered person. Madam, if you buy any product from unregistered unregistered dealer, absolutely no problem. Now it is exempted. Section 9(4), they have postponed actually. 9(4) now it is not there. Otherwise, you are supposed to discharge the tax liability and you have to declare in under RCM and you can take the credit also. Now only listed services you are supposed to discharge the tax liability. Otherwise, on unregistered dealer purchase, time being there is no tax liability, then there is no question of ITC also. Time being, okay. Whenever government come with the tax liability on RCM, then automatically you are supposed to discharge. 9(4), section 9(4), time being they have postponed. Okay, PPT is visible and voice is also okay, that and all okay. Then, sir, when somebody is talking about software import, that is what, if you import a software, automatically, if it is a product, you are supposed to discharge the tax liability relating to that software or that product. If it is a service, then depending upon the SAC code, you are supposed to discharge the tax liability. Then once again, both are eligible for credit. This is relating to software. Then, sir, when the machinery is imported along with the spares gifted assets, okay, how the valuation is done for the pre-spares for charging IGST? Sir, whenever you purchase the machinery along with the spares, if the spares is free, that automatically that cost of the pre-spares they have loaded on machinery. Because of that reason, whenever you are paying a import duty on machinery, that is more than sufficient. Whenever you import the spares along with the machinery. As of now, I have clarified everything. Now, once again, I will go back to PPT. Types of imports, the import of goods and import of services. Import of goods means brought into India from place outside India. So import of services, supplier located in India and recipient is in India. This is the slight difference between goods and services. Whenever you bought into India, place outside India, then automatically it is an import of goods. Supplier located outside India, recipient is in India. In case of goods, where the supplier he is situated, he is there in India or abroad, that is not the matter. Say for example, some people maybe they are residing in India, they will make arrangement of import of goods. Then automatically, whatever you are getting the goods, that is very, very important. On that, you are supposed to discharge the import duty as well as IGST. Whenever you are paying IGST, you are eligible to take the import tax credit. Import of services, supplier has to be located outside India and recipient is in India. Okay. Now, customs duty. Custom duty, basic custom duty, additional duty and countervailing duty replaced by IGST, and filing bill of entry, valuation, IGST payment. All these things we will discuss for a while. Basic custom duty already we have discussed. If you import the goods, you are supposed to levy the basic custom duty. In case of service, there is no question of basic custom duty. It is applicable only to the goods. Additional duty or a countervailing duty. Normally, whenever you import the goods, even before introduction of the IGST, normally custom department, they are supposed to levy the tax equivalent to local tax. Either it is a central excise or some other state taxes, whatever it may be. Now it is replaced by IGST. Say, for example, if the IGST is 18% locally in India, automatically you have to pay 18%. Okay. Whatever equivalent tax in India that you are supposed to discharge it. Then filing a bill of entry. See, already I have explained for each and every bill of whatever import, you are supposed to file the bill of entry. Once you file the bill of entry along with custom duty, you are discharging the IGST. Then after discharging the IGST, normally custom people, they will upload all this bill of entry in IceGate website. Then automatically it will come to your 2A and 2B. Okay. But as of now, it is not mandatory. Even if it is not come in 2A or 2B also, you are eligible to take the input tax credit. But each and every import, whenever you are importing, custom authority, they are supposed to upload that bill of entry to the IceGate website. Automatically, it will come to your 2A. 2A and 2B, I think our members know very well. Several times whenever I used to conduct the webinar, I have explained. Just for a minute, I will explain that concept. Whenever you are buying the commodity locally, each and every supplier will upload GSTR1 that will comes and sits in your website in 2A and 2B. Okay, what is the difference between 2A and 2B and all we will not discuss today, but the basic idea is if you purchase the goods, automatically it will come to your website. Like that, whenever customs authority, if they are filing the bill of entry, then that IGST amount, it will reflect in your 2A and 2B. Then valuation. Normally there is a valuation rule. Whenever you import the goods, basic cost of your supplier plus freight charges plus freight and insurance, like that, there is an valuation rule. After adding all these things, they will calculate the custom duty on that basic price plus custom duty along with that, and over and above, we are supposed to discharge the IGST. Okay. Then once you discharge the IGST, they will release the goods for home consumption. That is possible, whether you want to resell it or you want to use for your own consumption, for a factory or whatever. It's all depending upon the situation. But before releasing the goods, you are supposed to discharge all this tax liability. But in case of service, that is not possible because physically, how you are getting the service, it is a very difficult to trace out. Say some people, now a lot of mechanisms are there. Say like your whatever server will tell how much service you have received in terms of man hours or whatever it may be. Some tracking is there. That is a different issue. But even then, it is very difficult to trace out. But even then, whenever you receive the service and if you make the payment, whichever is earlier is the time of supply and you are supposed to discharge the liability. Valuation of import under GST. Valuation based on custom valuation rule, transaction value method and inclusion method, freight, insurance, etc. Calculation of IGST. IGST is equal to custom duty, customs value, duties into IGST rate. This is the mechanism to calculate the IGST. Then this is a small example how we will calculate all these things. Our member, this is not required actually, even then I have put it. import goods is worth 10 lakh, BCD is 10% and 18%. Custom duty you are supposed to pay 1 lakh and IGST is equal to 11 lakh into 18% is equal to 1,98,000. You are supposed to discharge it. Say as a duty you will discharge 1 lakh custom duty and 1,98,000 IGST. Then you are eligible to take the input tax credit 1,98,000. Basic custom duty is not eligible to take the credit. But if you import the goods for a SEZ and EOU, then automatically including custom duty and IGST, no need to pay. Then there was a concept called high C sales. Before introduction of the GST also, we do see what is high C sales, that we will discuss little bit. Then we will discuss the tax implication. High C sales means before reaching to the India, if you sell that product to somebody else, then this is called high C sales. Say for example, somebody will export goods from USA to India. If they export the goods, it will take to reach India maybe at least 15 days to 1 month. During that time, if you sell that product to somebody else, then automatically you are not liable to pay any tax because you have sold the goods before reaching to India. That is called high C sales. For high C sales, there is no tax liability. Okay, that is also possible, but those who are importing the goods or those who are purchased from you at the time of import, they are supposed to discharge the basic custom duty and IGST. Then import of service under GST, place of supply, location of the recipient, and IGST payment on reverse charge basis. Importer is responsible for paying IGST under RCM. Say for example, place of supply, location of the recipient. Say for example, if I am in India, okay, that is the place of supply and we are supposed to discharge the tax liability under ICM. IGST payment on reverse charge base, no doubt at all. In the case of service also, you are supposed to discharge the liability under RCM and you are eligible to take the input tax credit. Exemption of import under GST, specific notification exempted. Say for example, so many in case of charity, education, for all these services are exempt from tax. 12 the notification number 12/2017. There is a huge list of exemption. If your services is listed in that, automatically your service is exempt from tax. Even goods for that matters, if you import a goods for charity purpose or education, or if you are a trust under whatever income tax, all these things, whenever they import, automatically they are not supposed to pay any tax liability. Okay, without any custom duty and IGST, they are eligible to import it. Service exemption, certain imports like services related to foreign exemption, trading exempt from tax. GST on compensation cess. The applicability, luxury goods and demerit goods and import like cars and aerated drinks, all these product. Once again, now we will discuss the tax rate. There is a 1% tax, 3% tax, 5% tax and 12% tax and 18% tax and 28% plus cess. This custom cess you are supposed to levy on luxury goods, demerit goods and import like cars and aerated drinks. Like big cars, if you import a big cars, okay, and aerated drinks and luxury goods, all these things liable for higher rate of tax along with compensation cess. If you pay the compensation cess, automatically you are eligible to take the input tax credit, but this compensation cess you can utilize to discharge the cess only, not for any other credit. That is not possible. Okay. Then cess on import calculation based on custom duty value plus BCD. The cess, how to calculate the cess? First, we need to calculate the basic custom duty. If the basic value of the product is 100 rupees, custom duty is 10%. On 110%, you are supposed to calculate the cess. Eligibility for ITC claim on imports for business use definitely allowed. Okay, whether it is a goods or services. Documentation required. Okay, bill of entry, payment of IGST proof. That is required. Say for example, in case of goods, bill of entry. In case of service, whatever tax paid challan itself is a proof for taking the credit. See the Mohit mineral case, we will discuss within 5 to 10 minutes. This is very landmark decision. It has made a big revolution in India. I will explain another 5 to 10 minutes. Then we will discuss about the import. Then I will go to export. Mohit mineral case, what happened actually? There is a company called Mohit Minerals. They have imported certain product. We know very well there is a basic value and freight value. On whole value of the goods, including freight value, Mohit Minerals Private Limited, they have discharged the custom duty as well as IGST. The department has started the ocean freight is a service, and on purchase value, whatever freight charges you have discharged, on that you are supposed to discharge the service, whatever GST. It is a service. That is what department has argued. Finally, what happened? Mohit Mineral, they have gone to High Court. High Court said, no, you are supposed to discharge the tax liability on ocean freight. It is not a new thing. Even earlier law also, people are advised to discharge the tax liability on ocean freight. But before introduction of the GST, there was a case. There it was settled saying that it is, if you pay the service tax on this, it is a double taxation because including freight charges, people are discharged the tax liability and there is no question of liability once again. Then Mohit Mineral, they have gone to Supreme Court. In between, in whole India, so many people, they have discharged the tax liability and they have taken the credit. Some of the people, they have discharged it and department has disallowed the credit due to time limit. All these things, there was a big havoc has created in India due to ocean freight. Then finally, in Mohit Mineral case, Supreme Court said, no, already they have discharged the custom liability, custom duty, including basic value and freight value. Because of that reason, again and again paying tax on these services is not correct. Hence, it is exempt from tax. That is what Supreme Court said. Once the Supreme Court decision pronounced, so many people, they have whatever discharge the liability, they have claimed the refund. There, if you have already taken the credit, then there is no question of refund. If you are dealing with some of the exempted product or a trading, then automatically whatever you have paid tax liability, then you are eligible to claim the refund. Okay. In my case also, I have claimed so many refunds due to these decisions. Okay. But still some of the department officials, they are arguing, no. You have not filed any appeal, you are not eligible, all these things. But according to my opinion, you are eligible to take the refund. Please, even if you have not filed, please file the refund and claim the refund. For that, time limit is within 2 years from the Supreme Court decision. Okay. Now we will discuss. I will discuss your queries for another 5 minutes. Then once again, I will go back to PPT. Is there any query up to this? When the machinery, I have answered PPT presentation mode. Okay. Okay, I will do it. Then, sir, what is the position of interport trade, import or for export, and how treated in IGST? This is whether IGST is paid. Interport. Sir, what is interport trade, import for export? Import for export. Definitely, sir. At the time of Sir B. Kumar, FCMA 25282 Chennai. Kumar sir, see, whenever you are importing the goods, if it is for export, if you do any activities in bonded warehouse, or if you keep the goods in bonded warehouse, absolutely no problem. No need to discharge the tax liability. You are eligible to re-export it. There is no tax liability. But in the course, if you import for human local consumption, then if you export, then automatically you are supposed to discharge the tax liability. Whenever you export IGST, it is exempt or zero rated, or if you pay the GST also, you are eligible to claim the refund. Okay. Now, there is no other question. Okay. Now I will go to PPT. Somebody is telling it should be. Okay, if somebody want to ask some question, you can put it in question and answer chat box. I will reply each and everything. As of now, no. I will go to next PPT. Okay, regarding Mohit Minerals, shortly I have explained. The ocean freight, whatever you have paid, now it is not taxable. Earlier it was taxable, and people are taken the credit. Those who are those who have taken the credit, absolutely no problem. Those who have not taken the credit, they are supposed to claim the refund. That was possible. And significant interpretation of import provision. See, the thing is, import provision, whatever applicable to IGST, you have to interpret properly. Otherwise, what will happen? Automatically, based on your valuation or whatever may be the reason, you are supposed to discharge the additional liability. Challenges and complaints for import complex valuation. Say, for example, there is so many issues. If you import a goods, you are telling this is 100 rupees. But custom authority, they will compare some other goods similar to this or same goods. They are telling no, you are quoting only 100 rupees. The value of this material is 150 rupees. On that, you are supposed to discharge the tax liability. Then litigation will start. Then once the litigation starts, the valuation is so complex. The valuation is so complex. It is very difficult to convince the custom authority, because see, their argument is no. Some other people, they are importing similar to these goods. They are charging 150 rupees. You are charging only 100 rupees. You are telling only 100 rupees. All these things will start. That is why valuation is very, very complex. Double taxation comes on in services. Okay. In the case of services, sometimes there is a double taxation also. Compliance, proper record keeping, timely GST payment and ITC claims. Okay. The compliance, you have to maintain a bill of entry, and you are supposed to take the proper input tax credit. You have to declare in GST ER 3B, all these things. Compliance, you are supposed to do it, and basic document also you are supposed to maintain. Conclusion. Import under GST is a crucial aspect of international trade compliance. IGST, valuation, ITC and exemptions are essentials. Okay. And final thoughts, compliance ensures smooth import transactions. Stay updated with notification and circular. See, for this all import valuation and what are the valuation rules, all these things, government will issue the notification time to time, and also they are issuing the circular saying that what type of documents you have to maintain, what type of tax you have to pay, everything they will clarify wherever there is a litigation that you need to go through it. Then automatically it is very easy to manage. Otherwise, it is very difficult. Now I will go to export. Before that, who done the valuation under imports? Okay. Yeah, sir. Tirupura Sundari, sir, membership number 228,475. No doubt 2,98,000 is total tax. Out of that, 1,98,000 is IGST and custom duty is 1 lakh. But you are eligible to take the input tax credit only 1,98,000. What doubt you are having? Please write it so that I will reply. For sir, for import 10 lakhs. Custom duty 1 lakh plus IGST 18%, total tax is 2,98,000. Please clarify. Definitely no doubt what you are telling is 100% right. Out of 2,98,000, 1,98,000 you are eligible to take the input tax credit. Only 1 lakh is relating to custom duty. It is a cost for you. Okay. Who done the valuation under import? It is a self-assessment. Whenever you import the product, you have to do your valuation. And based on that valuation, you are filing a import manifesto and bill of entry. When you file the bill of entry, that is the value. They will take it as a base. On that they are supposed to charge the tax liability. But if there is a litigation, automatically what they will do, they can refer to somebody else also, or otherwise you have to prove it. This valuation, whatever you are putting, it is 100% correct. For that valuation process, you have to follow valuation for same goods or valuation for similar product or some other product matching with this. All this process you need to follow. Up to this I have clarified. Now we'll go to export. Export under GST. I will take 1 minute, 2 minutes break. export under GST. Whenever you are sending goods outside India, or if you give a service from India to abroad, that is an export. In India, whenever you export, it is a, even though it is taxable, it is zero rated, then there is no question of tax liability. Definition under GST regime: export of goods and service considered as a zero rated supply, imports from promoting export under GST to boost the international trade. What is export? Whenever you send a goods from India to abroad, or services, if you give a services to abroad, that is exempt from tax, zero rated tax, and it is an export. Export of goods and services considered as a zero rated supply. Okay. With LUT, if you are having a LUT, if you export it, then automatically it is a zero rated. Eligible input, you are eligible to claim as a refund. That is possible. Importance of promoting export under GST to boost the international trade. We know very well, whenever you export, automatically there is a foreign trade surplus. You will get a foreign currency. Because of that foreign currency, our position will be world trade is very good. That is why India is promoting export through zero rated tax. Why we have to promote? Automatically, if you promote the export, foreign currency will come to India, then Indian position in world, it will place very good position. That is what. Okay. Now, legal provision for export under GST 16(1), it is a zero rated supply. Definition of export goods and export of service, refund of tax in case of export. All these things little bit we will discuss, and in later stage we will handle it. Zero rated supply means the tax rate is zero because it is an export. Say for example, maybe 3% or 5% or 12% or 18% or 28%, because if it is an export, tax rate is zero. And definition of export goods: if the goods leave from India to abroad, then automatically it is an export. Export of services, service rendered by the Indian company to abroad, this is a service. Refund of tax in case of export. There is a two option. If you are having an export, then what you can do? Zero rated export. If you do, all input, whatever accumulated, you are eligible to claim the refund. But input tax on capital goods is not allowed. If you do the with payment of duty, say for example, whatever input eligible and along with the capital goods, you can take the credit, and whenever you export, you are supposed to discharge the tax liability by using all this input. If there is a shortage, you are supposed to discharge the tax liability through cash ledger. Then all the tax payment, whatever you have done, automatically you are eligible to take the refund. Then movement of goods outside India, need for an invoice, shipping bill and LUT, letter of undertaking or a bond. Export definition is movement of goods outside India, need for an invoice or a shipping bill and LUT, letter of undertaking or a bond. Each and movement of goods outside India, out of India, absolutely no problem. Need for an invoice, you are supposed to raise the invoice and shipping bill and LUT, letter of undertaking. Each and every year, beginning of the year, you are supposed to upload the LUT, letter of undertaking, before export. That you have to do it. Then only you are eligible to claim the zero rated tax. Otherwise, you are not eligible. Okay. Then export of service, 5 conditions for service to be classified an export. Location of the supplier, location of the recipient, place of supply and receipt in foreign exchange. Here, receipt of foreign exchange is very, very important. Now, whenever people are claiming the refund, nowadays they are rejecting the refund due to you are supposed to submit a FIRC. Earlier there was an EBRC. Now EBRC is not available. Because of that reason, they are asking once again FIRC. In so many cases, we have submitted the banker certificate and we got the refund. Nowadays, they are so strict. If you submit the FIRC, then only they will give the refund. No physical movement in what we know very well. Services, it is very difficult. Okay, even sitting in India, you can give a services to abroad. That is possible. So many companies, what they are doing in foreign server, they are working. Then automatically that also treated at par with an export. That they are doing. Okay. The export procedure under GST with payment of IGST. Exporter can pay IGST and claim the refund. That is possible. Without payment of IGST, LUT bond-based export, no payment of IGST and refund of accumulated ITC. Here, problem is input on capital goods, you are not eligible to claim as a refund, but with payment of IGST, there even input on capital goods we can utilize and we are eligible to claim the refund. Documents, invoice, shipping bill, bill of export and export declaration. All these documents are very, very important to say it is an export. Once again, I will go back to question and answer. Okay. Who done the valuation? I have replied. Is there any difference between HSS and drop shipment case? If drop shipment, if from and to outside India. What is HSS? I don't know, sir. Please give me HSS. What is that HSS? Shipment case to drop shipment from and outside India. I don't know. See, the thing is, shipment case, if drop shipment if from and outside India. Oh, what is that? I'm not getting that question actually. Is anything we have to report in GST return of drop shipment business like sales of purchase as a purchase are not hitting the India border and sold buyer outside India? Now I got it. Ram sir, say whenever you sell the goods outside India, say for example, you are having a office in India, what you will do, you will buy a goods from China and sell it to US. Then this is the outside the purview of the GST, because this transaction, whatever you are doing outside the purview of the Indian taxation, whole business you are doing outside India. That is why there is no question of tax liability on this. In that case, no need to declare even in GST return. It is outside the purview of the GST. Is anything we have to report in GST return drop shipment business like sales, purchase are not hitting the India border and sold outside India? No need to declare it GST return, and it is not taxable at all. Okay. Now, sir, for import 10 lakh, CD 1 lakh, IGST 18%, total tax clarify. I have clarified already. Okay. Sir, unable to see the question of members. I think moderator has to approve the visible for members. I don't know whether members can all this question or not, but it is visible to me. I am clarifying. Okay, sir. Thank you. It is more than 20%, so I doubted. Okay. Sir, whether it is 20% or 30%, it's all depending upon the situation. IGST rate is only 18%, but basic custom duty is 10%. The limit is that 20% plus 20%, 40% for only IGST, not for this tax. Okay, then can you claim a refund for exempted sales? Definitely, sir. Amuda, try to understand. If you are dealing with the exempted goods is not taxable. You are not eligible to claim the input tax credit. But it is an export. If it is an export, you are eligible to take the input tax credit, and against export you are eligible to claim the refund. But in case of domestic sales, automatically you are not eligible to take the input tax credit. Sir, HSS means high C sales. Okay, high C sales two types, sir. High C sales two types. Whenever you sell the product high C to abroad, then only it is not come in the purview of GST return. But in case of high C sales, you need to declare in GST return. That is better. Okay. Say normally, if you are selling the product before reaching to India, if that product comes to India, then automatically it is an high C sales. But if the sale outside the purview of GST or outside the purview of this one, then automatically no need to declare it. Even high refund process for an export. Refund of IGST paid process for export. Refund of IGST paid on export, condition, time limits, and the refund application process. What is the condition for IGST? Either it is a goods or services, it should be export. That is the condition. Time limit within 2 years from the export, you are supposed to claim the refund. Either it is a service or goods. And the refund application process, you have to upload the RFT01. After uploading, automatically they will process it and they will give the refund. If required, you have to go and sit with the officer and whatever process you have to do it. That is for input tax refund. In the case of input tax, in the case of refund with the payment, then whenever you are filing the shipping bill in GSTR1, automatically refund will credited to your bank account. Okay, unutilized, applicable for LUT and bond export. Time limit is 2 years from the relevant date. Within 2 years from the export, you are supposed to upload the RFT01. You are eligible to claim the refund. Relevant forms: RFT01 application for refund, and GST TRB and GSTR1 key return for export. Normally they will cross verify with your GSTR1 3B. They are cross verifying your input along with 3B, and they are cross verifying your export along with GSTR1. All these process they will follow. Okay, this is the process for refund. Few circulars we know very well. There is a two types of refund. First is if you upload with payment of duty, if you upload the shipping bill, automatically it will credited to your account. In case of input tax refund, either to services or goods, there was a lot of documentation you are supposed to do it. At that time, there was a practical difficulties. Because of that, key circular, they have issued so many circular, notification 37, LUT bond provision, all these things, and circular number 37 for 2018, clarification on refund related issues. These documents are mandatory. What is the format of declaration, how to declare input, and what is the format of declaring the sales? All these format they have given. And even in circular number 125 bar 2019 also they have given the detailed process and formats. Okay, if you go through this process, automatically you are able to get the idea, and you are whenever you are eligible to claim the refund, you can follow this process. That is possible. Then letter of undertaking mandatory for zero rated supply without payment of tax. Normally, some of the company they will forget to upload the LUT. If there is a case, automatically litigation will start. Even then, no need to worry about the LUT, because in higher level, if you go to the appellate level, either in Joint Commissioner Appeal or a tribunal, if you are able to prove your export, it is a procedural matter, and maybe they will allow your case. That is possible. But only thing is, just you have to upload the LUT, automatically it will be treated as you have taken a LUT. That is why each and every year end 31/3 or 1/4/2024 or 23, depending upon the situation, or 25 in future, better to upload the LUT. It is a small process. Maybe within half an hour you are able to complete it. That is why better to upload it. Bond alternative of LUT for exporter, only few cases it is possible. Otherwise, LUT is more than sufficient. GST RFD 01 refund application for. If you go to the website, there automatically it is reflecting RFD 01. There you have to fill the details and your refund calculation, everything. Then whatever eligible to refund, you are eligible to claim it. Recent amendment, changes in refund mechanism, extension of LUT bond validity and procedural update, simplification of compliance for small exporter. All these things, please follow it. Okay, challenges in export under GST. What are the challenges you will face? Complex refund process, delays in processing refunds and documentation requirement. Especially in the case of input tax refund, there is a lot of issues we are facing while filing the refund as well as while getting the refund. Say for example, especially during the year 17-18 and 18-19, lot of refunds they have rejected due to invoices are not uploaded in website. Then subsequently they have clarified, if you are, even if it is not uploaded, by uploading the physical invoices, you are able to get the refund. But nowadays 2B is mandatory. Because of that reason, whatever available in 2B only, you are eligible to claim the refund. Maybe in future, input tax related refund issues relating to supplier are not uploaded, it will not happen, because only to the extent of whatever input is uploaded, only to that extent you will claim as a refund. First problem. Second one is regarding FIRC. There is a lot of litigation. So many people refund they have rejected because of FIRC or EBRC or banker certificate, whatever may be the reason. I have claimed lot of refunds by submitting the banker certificate, but nowadays department official they are asking FIRC only. Based on banker certificate, they are not processing the refund. Okay. Then documentation, other documentation process like a sample invoice copies, you are supposed to upload it, and reconciliation of input tax credit, you are supposed to upload it, and FIRC reconciliation along with invoices you have to submit, like that. Least is there is a lot of requirement. If you go through the circular, probably you will get a whole idea. It is possible. ITC accumulation, issues with accumulation of input tax credit. Whenever you calculate the input tax refund, automatically whatever input available in that time period, you are eligible to claim the refund. If you are having a carry forward input tax credit since so many years, say 5 years, 10 years, then you are not eligible to claim the input tax refund. Then what you can do, you can go for with payment of duty, whatever accumulated input tax credit, you are eligible to discharge the tax liability on export, and if you claim the refund, that is possible. Taxation intermediary services misinterpretation or intermediation leading to tax dispute, especially intermediary services, it is a big issue. Okay, whether it is an import or export, it's all subject to in the case of intermediary services. Okay, if you are dealing with a, say, now I will give one example. You are doing a market survey in India. At the same time, you are importing some goods. If the department officials, if they are able to link with your market survey and import of goods, then they will treat it as an intermediary goods. Whatever you are billing to you abroad, they will not treat it as an export. That is why better to have a two-way agreement. One is for market survey. Second one is you have to prove your principal supply from abroad, they are supplying goods to the end customer. If their department people, if they are able to link the transaction, then they will treat it as a intermediary transaction. Then they will disallow your export and you are not eligible to claim the refund. And even on export also, they are supposed to collect the tax liability. That is why in case of intermediate service, you have to be very, very careful that interpretation also, it is subjective, highly subjective. As of now, is there any question? Okay, another 2 to 3 question asked there. LUT is submitted September 2000 for the year 20. Can you zero tax report claimed for the earlier period? Sir, Jyoti madam, if you submit LUT in later stage, only subsequent transactions are allowable. Say, for example, up to September 2024, no doubt there is a litigation. But in higher level like tribunal level or appeal level or in high court, definitely they will tell it is just procedural matter, absolutely no problem. What ultimately assessee have exported the goods or not, they will ask, and if you export the goods, then you are eligible, but you are, but time being, whatever LUT is a prospective, retrospectively you can't do it. Sir, whether the reversal of IGST is to be done to tune of duty drawback amount. Sir, whenever you are having a duty drawback, no need to reverse the IGST. I teach overseas students and earn in foreign currency. What is the formality do with the undertake to be? Sir, if you teach the overseas students, better to go for LUT. Okay. If you take a LUT, automatically it is equivalent to export. No need to discharge any IGST. Otherwise, if you are having more than 20 lakh turnover, department will, people will levy the GST and you are supposed to discharge it. Okay. Then, oh, the Ananta Krishnan, there is a big question. What about the duty drawback? I am not getting actually. We are the manufacturer of supplier of OE parts to car, manufactured in India and outside India. For manufacture of auto components, we need to make pattern for which we are getting payment from export customer. Manufacturing pattern need to be technical knowledge and designing skills, and we may have to incur development charges also. Can you treat the export receipt of export as a service? We are the manufacturer and supplier of OE parts to car manufacturer in India and outside India. And for manufacture of auto components, we need to take a pattern for which we are getting payment from export customer. And manufacturing pattern need a technical knowledge and designing skills. And we may to incur the development. Sir, this question I got it, Ananta Krishnan sir. It is a big question you are asking, absolutely no problem. If you manufacture for abroad, if you are getting from abroad, here it is a two parts. If you manufacture, if you give it to India, that is not an export. And the service also you are giving in India only, not to the abroad customer. Hence, it is not export. Whatever eligible input, you are not eligible to take as a refund. That is my opinion. But if you are having a tie-up with abroad supplier, if you give any technical knowledge to them, that is considered as a export. Only thing is, if you are using that technical knowledge in Indian product and if you supply that Indian product in India, then it is not an export. Okay. Then CMA Kedarnath, dear sir, regarding GST refund period, ABC engaged in the export of services, their FIRC copies period 23 September. Can you apply a refund for the period April to September 23? Okay, no FIRC in the month of April 2023. Sir, within 2 years from the export date, you are supposed to claim the refund. Now, 2024, we are in 2024, 23, 24 and 24, 25, both the years we are eligible to claim the refund. That is one part. Second one is FIRC for the period May 23 to September 23. Okay. When you have received the FIRC, at that time, no FIRC in the month of April 2023, absolutely no problem. Whenever you receive the FIRC, for that all earlier period, you are eligible to claim the refund. But only thing is, for each and every month, whenever you are claiming the refund, for that you need to have an export invoice. FIRC, say for example, keep on April to September, each and every month you are raising the invoice. Once you raise the invoice, then if you receive the receipt at one shot at the end of the September 2023, absolutely no problem. You are eligible to claim the refund for all 6 months. Okay. Even if you received the advance also, absolutely no problem. Somewhere in 2023, 2022, 23, maybe you will receive the advance, but export invoice will be you are raising in 23, 24. In that case also, you are eligible to claim the refund. Okay. Now I will go a little bit speed, only another 11 minutes are there. Okay, ITC accumulation, taxation of intermediate, practical example, export with and without payment of IGST, refund claim under how to process the efficiently, use of LUT bond and practical implication. See all these very, very important points. Export with and without payment of duty, already I have explained. We are having a two option depending upon the input position. Okay, you have to opt this. In my case, normally what I will do, out of 12 months, I will go for 10 to 11 months with input. In 1 month, I will go for with payment of duty, so that whatever accumulated input tax credit on capital goods, I am eligible to claim it. That is possible. There is no hard and fast rule. Okay, 1 month you can go for with input, 1 month you can go for with payment of tax. Everything is possible. Same period you are not eligible to opt both. Okay. Now time period you know very well, each and every month you are eligible to claim the refund. Refund claims, how to process them efficiently. Based on circular, if you arrange all the documents, then it is easy to get the refund. LUT and practical implication, better to raise the LUT each and every beginning of the year. Some of the cases are there here on export services and IT case studies on claiming input tax credit. Okay. Summary, zero rated supply under GST promotes the export procedure to follow for refund, LUT and bond, significant case laws and their impact of exporter, key compliance spots for exporters. Say what you can do relating to all these refund, there is an advance ruling. There is a cases also. If you go through that, whatever important points you can pick up from that cases and advance ruling, so that wherever critical issues, are there, you are able to handle it. Okay. Conclusion, export under GST provides a multiple benefit but requires strict compliance. Proper documentation and timely filing are crucial for smooth export operations. Some of the case law developments are helping to resolve the complex issues for exporter face. Okay, see the thing is, if you comply each and everything properly, then absolutely no problem. In one of my cases, what happened actually, I have filed the refund in time, but they have rejected. Refiling I have done after 2 years. Now they are telling it is a time bar. But initial filing I have done within 2 years. That is why, even though I have filed refiling late, absolutely no problem. We will fight it, and whatever that time period for 2 years for refiling, it is not applicable. That is what we have to argue it. Now, see, some of the practical issues are there that we will discuss for another 3-4 minutes, and if there is a query, I will interact with you people. Otherwise, I will close it. Branch transfer, you know, see there was a big news. Infosys department officials are levied 32,000 crores on Infosys. Then they have clarified, no, there is no tax liability. It is just branch transfer. Here, in case of services, department officials are not having proper control. Even companies can whatever misrepresent it, but maybe Infosys is not misrepresented, but some other companies. Say branch transfer, what will happen? You are sending money to abroad and we are receiving money from abroad to here. All these things are common. If you want to maintain the branch in abroad, or abroad company, if they want to maintain a branch in India, it is normal. But in case of service industry, the department officials, they will see your transaction in a suspicious manner. Say maybe you have given some services, or maybe you have received some services. For that you have transferred the money. That is what they will treat, and they will levy the tax. In case of branch transfer, in case relating to even Infosys happened like that only. Amount they have transferred from here to there, then department officials told, no, this much of amount you have transferred, you have received the service, and you are supposed to discharge the tax liability under RCM. It's all depending upon the situation to situation. It is very difficult to tell upfront whether it is a correct or not. Just I have highlighted the issue. Second main issues we know very well. Now it is little bit settled to some extent, but still it is going on. See, the people are deputing their employees to India. Indian company will pay the salary. Whether that salary is a service or a salary, it is a big question. Due to whatever non-availability of time, I will not discuss in detail because another 5 minutes is there. Just go through it. There is a lot of issues, but now at least due to amendment in RCM, whatever you have paid, you are eligible to take the input tax credit. And the government has waived the interest on penalty up to 2020 up to 2020 from 17 to 20. That is why whatever interest is payable, no need to pay. But over and above, you are supposed to pay the interest and penalty. But basic amount, whatever you have paid, you are eligible to take the input tax credit relating to secondment issue. But even that issue is not settled, it is open. Maybe somewhere, some high court or Supreme Court decision, depending upon that situation, maybe issue will settle. Services received outside India. Okay, sometime maybe services rendered outside India, amount received outside India, but because you are showing in your balance sheet, maybe they will argue this is service rendered in India. Freight on export, That ocean freight already we have discussed. Netting of foreign exchange. If you are having a export as well as import with the same party, netting of foreign exchange is allowed. But for claiming the refund, producing FIRC is a difficult task. Okay, practically I have handled this case actually. Okay, some of the state they have sanctioned the refund, some of the state they have not sanctioned the refund. But in the GST, they have to amend the law, otherwise litigation will continue. With this, I will close it. I will interact with you with a whatever question and I will close it. Oh, so many other questions also. Deemed export under GST, sir. There is a deemed export under GST. Whenever you are selling to somebody, if he export, that is called as a deemed export. And even if you are selling to SEZ, that is a deemed export. And EOU also. But now there is no time. We will discuss in some other forum. Sir, client is purchasing the goods April to, but export made in July 2000. So we can apply refund in April 2014 or sir, whenever you are selling the goods, okay, at that time you are supposed to apply for refund, not at the time of purchase. CMA Ashok Kundap, joint venture say Alstom India and Alstom France rendering the worst contract of signing the system for metro rail project. Can Alstom India raise the invoice to the client and be paid with the GST in India? Client for designing services rendered by Alstom France. Okay, sir, whatever services rendered in India, okay, even though you are paying outside India, it is taxable. Sir, any specific rules for a CMA valuation? Definitely, sir. Whenever litigation is there, B. Kumar FCMA 25282 Chennai, sir, whenever there is a litigation relating to valuation, cost accountants are playing very important role. If they reject all the valuation rule, then automatically they have to come to cost plus rule. Whenever they adopt cost plus rule, CMAs are playing very important role, no doubt at all. Sir, export to SEZ with and without payment of duty, can you do? Yeah, definitely possible. Whenever you are dealing with the SEZ, whether with payment or without, both the things are allowed, you are eligible to do it. Already 16:29. Okay, another 1 minute. I think I have clarified almost all points, and I will come in some other forum and we will discuss whatever laptop issue. Absolutely no problem. With this, I will close it. Once again, thank you very much, President, Vice President, and Chairman of Taxation Committee and employees of TRD, all the members and ladies and gentlemen. Thank you very much. I will close it now. Word to TRD. Madam, you can end the session. Otherwise, I will close it. Is there any question? Okay, sir, can a department reject the refund of zero rated if taxpayer tagged a risky exporter? Sir, they can reject the refund. Limit is not applicable in case if they reject as a risky exporter. Even in my case also, one of my client is facing this problem.
Sir, we thank you for your session, sir.
Okay, thank you very much. I will close it. Okay. Regarding risky exporter, they can reject it, but once again, once they clear red flag, automatically you can reclaim it. That is possible. Just like that, they can't reject your refund. Refund is live only, but time being they can keep it pending. That is possible. Okay. Thank you very much. Thank you once again, each and everybody.
Sir, thank you for your session, sir, and thank you for your valuable inputs and your time. We thank you for the very insightful session, sir.
Okay, thank you very much. I will close it.
Thank you, sir. We are ending the session now.